Have you ever found yourself wondering, do I really need to pay taxes on that Venmo income? You're not alone. In today's gig economy, peer-to-peer payment apps like Venmo have become incredibly convenient for everything from splitting dinner bills to getting paid for freelance work. But this convenience comes with a crucial, often misunderstood, responsibility: taxes. For years, many assumed that money moving through Venmo flew under the IRS radar. Maybe you sold some old furniture, did a few freelance gigs, or even ran a small online business, and Venmo was your go-to for payments. It felt casual, almost like cash. But the reality is, the IRS views income received through Venmo, just like any other earnings, as taxable. And with recent changes in reporting thresholds, it's more important than ever to understand your obligations. So, let's cut through the confusion. This isn't about scaring you into a tax panic, it's about empowering you with the knowledge to confidently navigate your Venmo income and stay on the right side of the IRS. We're going to break down exactly what kind of Venmo income is taxable, what those changing reporting thresholds actually mean for you, how to accurately track your earnings, and most importantly, how to report it all come tax time, including those crucial deductions that can save you a significant chunk of change. Consider this your comprehensive guide to Venmo taxes. We'll explore the difference between personal and business transactions, delve into the infamous Form 1099-K, discuss the critical role of record keeping, and even touch on estimated taxes for those who are truly self-employed. Whether you're a freelancer, a side hustler, an online seller, or just someone who occasionally gets paid for goods or services through Venmo, this video is for you. By the end of it, you'll have a clear roadmap for handling your Venmo income with confidence and avoiding any unpleasant surprises from Uncle Sam. Let's dive in. Understanding taxable versus non-taxable Venmo income. The first, and perhaps most critical, distinction to make is between taxable and non-taxable Venmo income. This is where most of the confusion lies. Not every dollar that passes through your Venmo account is considered income by the IRS. Non-taxable Venmo payments. These are generally personal transactions and reimbursements. Think of them as simply moving money between individuals for non-business reasons. Examples include splitting bills. You went out to dinner with friends, and someone Venmos you their share. This is a reimbursement, not income. Gifts. Money received as a birthday gift, holiday gift, or any other personal gift is not taxable income. Loan repayments. If you lent money to a friend and they pay you back via Venmo, that repayment is not income. Selling personal items at a loss. If you sell a personal item, like an old couch or used clothes, for less than you originally paid for it, that transaction is not taxable income. You're not making a profit. For these types of transactions, you typically don't need to report them to the IRS. Venmo also aims to differentiate these, especially if you use the friends and family option or explicitly tag the payment as personal. Taxable Venmo income. This is where the IRS gets interested. Any money you receive through Venmo for goods or services you provide is considered taxable income. This applies whether you're a full-fledged business, a freelancer, a gig worker, or even just selling items online at a profit. Here are some common scenarios. Freelance work, getting paid for writing, graphic design, web development, consulting, or any other independent contractor work. Selling goods, if you sell handmade crafts, resold items, or any other products through an online store or directly to customers via Venmo, the profit you make is taxable. Even selling personal items at a profit would be taxable on the profit portion. Services provided, tutoring, dog walking, babysitting, handyman services, hairstyling, or any other service where you receive payment. Rental income, if you receive rent payments via Venmo for property you own. Essentially, if the payment is for something you did or something you sold for a gain, it's likely taxable income. Venmo has mechanisms to identify business transactions, especially if you have a Venmo business profile or if payments are tagged as goods and services, which typically incur a small fee. The evolving 1099-K thresholds and what they mean for you. This is where things have gotten a bit murky in recent years. The IRS uses Form 1099-K, payment card, and third-party network transactions to report payments you receive through third-party payment processors like Venmo. The historical threshold. For a long time, Venmo and other third-party payment apps were only required to issue a 1,099 KTU and the IRS if you met both of these conditions in a calendar year. You received over $20,000 in gross payments for goods and services, and you had more than 200 separate transactions. The $600 saga and delays. The American Rescue Plan Act of 2021 lowered this threshold significantly to just $600, with no minimum transaction count. This was intended to capture more income from the gig economy. However, this change faced a lot of pushback and caused significant confusion. For tax year 2022, the IRS delayed the implementation of the $600 threshold, reverting to the old $20,000/200 transaction rule for that year. For tax year 2023, the IRS again delayed the $600 threshold. For 2023, Venmo was not required to send a $1,099 unless you exceeded the original $20,000 and 200 transaction threshold. For tax year 2024, the IRS announced a transitional threshold of $5,000. So, for the 2024 tax year, the taxes you'll file in 2025, Venmo is required to issue a $1,099 if you receive over $5,000 in gross payments for goods and services. For tax year 2025 and beyond, the $600 threshold is currently expected to take effect for the 2025 tax year, the taxes you'll file in 2026. With that said, thanks for watching, and until next time.